The market is dramatic. In the past, I've compared it to a Southern lady that says one thing but actually means another. It's going to be a few days before this all settles, so let's take a few minutes and set our expectations accordingly and reality check where we are.
Breathe, stupid, breathe! You forgot to breathe again!
In real time of recording this, I'm saying this at the end, but I'm realizing I need to move it to the beginning because I cannot emphasize enough how important it is. When you see a lender or a realtor post a picture of interest rates, please take into account a few things. Rates are highly variable, depending on the day, depending on the lender, and the client scenario. Just because you see a rate index or an average is now 6.3, you won't necessarily see a 30-year fixed rate at 6.3. In some cases, that means like a 6.625 would be considered low. So really, this all started with Friday's job report, mainly the 4.3% unemployment rate. Historically, that's actually low, but not compared to how that's up from recent lows of 3.5%. Wage growth is also slowing down, and the Fed kept talking about how Americans were making too much money. So that caught their attention. Let this work itself out before we come to any grand conclusions. The reason that rates went down is truly because labor data came in softer. I will forever think that it is wild to work in an industry that benefits from a weak economy. When the economy is strong, people don't need an incentive to buy. Everyone's feeling good. It's like we're all trolls in that Trolls movie. But when the economy slows down, rates tend to react positively. So we're kind of in a better spot for a bad reason. The inflation growth has slowed down a lot. Yes, it's true that inflation is one of the key market movers, but even with lower inflation, there have been no Fed rate cuts. And that's because the Fed is really looking for economic balance. Even with lower inflation data, okay, these acronyms don't have to mean anything, but let's talk about easy math. CPI went from 9% to 3%, and PCE was above 7, and it's now down to 2.5. And employment data really remained strong until now. So we have had some of the inflation piece down, and right now it is all eyes on labor. So it's like the yin to the inflation yang. Now, some headlines are like, emergency rate cut now, but that is truly not how this Fed operates. We need jobless claims to come in higher. We need more and more, week after week, proof of deterioration in the job market. So think of this and where we are now as more of like a layup to the Fed cutting rates. And that's the one and only sports reference you will ever get. And I really only know that like Taylor Swift does that in a dance. So the labor cool down was expected, all right? It was even necessary after a wild 4 years. The early pandemic brought tons of job losses. Then it was like a frantic recovery. And so now that unemployment rate of 4.3% is kind of back to normal, but it's the highest that it's been in more than 2.5 years. What's good is that layoffs haven't really picked up yet, but workers who do lose their jobs are having a harder time finding new ones. Right now, it's close to a given that the Fed will cut rates in September. But truly, the market has already priced a lot of that in. I've seen so many people predict low rates and then take it back. Circle this date when this report comes out, and then nothing happens or they have to like take it back. And I have this flashback of being in the grocery store and seeing end of times on the Inquirer, and sometimes it feels like that. So I'm not a fan of a forecast, but right now we're honestly really close to the bottom end range of the 2024 forecast of 5.75 and 6.25. So it kind of doesn't really matter. We're just working with the data that we have right now, and so much has changed just in the past 3 days. So yeah, you'll see so many people saying that this is great news. And while it is, it's also really volatile. truly what we need is stability and less volatility, and for mortgage rates to stay lower for longer. And I think that that is really when people will get excited. The Fed meeting is over 5 weeks away, so there's plenty of important economic data during that time that will come in. We also know that moves like this often see periods of correction, even if long-term momentum continues. Have a great day. Reach out anytime, and we'll continue to stay calm and have conversations like this.